Sandeepa Arora, the President of IIFL Cap Inc., joins us now. Sandeepa, good morning and good to have you with us. I hope you had a nice conference so far.
Good morning.
What's the sense on the markets itself? Is it good to stay invested in, or do you think that post the budget there can be some disappointments?
I think that the mood is buoyant. The mood is clearly extremely bullish, in fact, on India from a longer term perspective. What happens in the short term is something that we cannot predict, but I think investors are looking at the budget, and this being the first full budget, people have a very high expectation from it, and I think the mood in the near term will be led by what happens in the budget. But having said that, I think the mood remains positive from a longer term perspective. So I don't see too much worry, at least as of now, unless the budget is really disappointing.
Okay. Sandeepa, hi. Good to have you on the show. This is Sonia here. What are the two or three most important things that you would expect from the budget this time around? And would the market be more happy if there is higher focus on infrastructure capex, or would it be happier if the government maintains its fiscal balance?
That's $1 million question right now. I think the key expectation is that the government needs to give a boost and kick off that investment cycle, because that's clearly lagging, and that is what the country needs at this point. The task ahead for the government to that extent is challenging, a fine line between fiscal consolidation versus moving away from it slightly and spending more on the investment cycle and kicking that off. So that, I think, remains $1 million question, but the investors would like to see, I think they're okay seeing a little bit move away from fiscal consolidation, but if that is used towards focusing on, building physical infra, social infra, I think investors are very keen to see that. In fact, if that does happen and they present a very positive move in that direction, I think the markets will take that very, very positively, because that's the most critical at this point. Amongst other expectations, I think, is that we know that India is one of the the lowest tax to GDP ratios. So I think the expectation is that you may see some increase in taxes here and there, or maybe some concessions will be taken away. You might see service tax, etc., going up. So that's the other expectation, which I think would pan out. Direct benefit transfer, as we've seen, they've done a very good job on the diesel side, but I think people would like to see that extended to other areas like food and fertilizer. And I think the last expectation would be on the recapitalization of public sector banks. That, I think, is also very critical, because most of these banks are in need of capital and they need clear guidelines on this front. So these are some of the key expectations from the budget. But you're right, the expectation on kick-starting the investment cycle is probably the biggest one at this point.
Well, I just wanted to point out that Ruchir Sharma ran a piece a few days back on his blog, very strongly arguing against any stimulus, saying that all governments that tried to stimulate have lived to regret that decision. But, well, that's a point of view, Sandeepa. I want to get to another question before I got some sector-specific ideas from you. How keenly should one watch the railway budget? Should it be seen as a harbinger of the budget?
I think so, but typically, so yes, that would give a sense of what's coming in the budget, but I really don't see a connect between the two, barring in one or two areas. So if I wouldn't put too much emphasis on the railway budget at this point, but clearly people want to know what kind of thoughts they have, which direction are they taking in terms of, especially on that infra side. For instance, we've seen some move forward on the DFC front. So those are big positives. So it does pave the way forward in terms of, putting on a mood, but I think the most critical day will be the union.
Of course. You heard about 100 corporates in your investor conference. We heard about your impressive guest list at length from your colleagues. what's the sense you have got in terms of where you would like to put your money? Or what are you advising your clients? Would it be the cyclicals? Would it be infra, the L&Ts, the state-owned banks and the private sector banks? Is that the focus?
Let me start at, the more macro view. I think people are already fairly optimistic on India and are positioned accordingly in very stock selective, moves that they've made. But to my mind, whatever I've heard from the corporates and the investors, there is a bit of concern that the recovery that was expected to be probably a little bit faster, I think, is now the expectation is that it may get delayed maybe to end of FY16 or perhaps even FY17. So I think the on-the-ground story is slightly bit more disappointing than what was expected earlier. And to that extent, I think there is an adjustment of reality that the recovery may be delayed. Having said that, I think clearly investors are looking towards the budget to see that next direction. But they are positioned selectively. So cap goods as a space hasn't attracted too much, but you do have positions in L&T, people are overweight there. So there are select stocks in that space. So I think the investments is still a lot more selective, and I think the investments is still focused on quality names, which is why you see these names get more and more and more expensive. But really not seeing too much investment on high beta names. So investments are focused still on quality names, whether it's banking, whether it's infra, whether it's pharma or IT. It's all focused on those quality names which show some visibility of growth into the next 2-3 years. But other than that, I haven't really seen investors step up and take extremely high risks in names that don't have such visibility, which is why I think the budget will become even more critical, because there are now short-term concerns on what's happening on the ground, and it's not as fast as people would have liked it to be.
That's an important point. Sandeepa, I understand that you have the Deputy Governor of the RBI, S.S. Mundra, speaking at 10 a.m. at your conference. If the budget sticks to fiscal discipline, then what do you think the RBI's next move will be? How many rate cuts are you expecting from now, say, until the end of the year?
I think clearly the worry of the inflation is behind. I think that is a big positive as far as we are concerned, and I think that is now well under control. The government, as I said, what stance they take on fiscal consolidation, whether they move a little bit away from it to focus more on investment, we don't know at this point. But if the government is well within those limits, I think the scenario is very clear that we're going to see rate cuts. It could be to the tune of 100-125 basis points through the course of the year. So I think that is a very big positive also, because it helps kickstart some investments on the private side, although we're not seeing that yet. But I think that will help, especially where people are seeing a lot of stress. That will help the stressed corporates as well. So I think that path is very clear. We're going to see rate cuts through the year.
All right. Sandeepa, we'll leave it at that. Thank you very much for taking time out of your conference and speaking with us, giving us your perspective.